Welcome to another episode of Tamra Simon's Live and the Real Estate Power Chat. Today we have Jason Allen from Network Funding, and I can't wait to get into the mortgage market with this guy because he's got 25 years of experience, if not more. So, know how it goes. First things first.
This is Tamra Simon's Live, where real estate agents from around the globe come together to grow, collaborate, and expand their business. Where we take our inspiring conversations and put them together to create dynamic connections. This is the Real Estate Power Chat.
Welcome. Thanks so much for joining me this morning, Jason.
Pleasure to be here. Thank you for asking me.
Absolutely.
It's a good day.
Absolutely. It's Thursday and, it's sunny. We have no snow yet for October. So, who can complain there? I'm not a skier. Can you tell?
Well, I have been known to ski and snowboard from time to time. I love Utah because I love the seasons, and we get all 17 of them.
And you can get all of them in one day.
All in one day. Yep. Yeah.
So how the heck are you doing otherwise?
Good. Life is good. I always tell my real estate agent friends, whether they've been in this business for a long time or whether they're rookies, I ask two questions. I say, who do we have to blame for you getting into this industry? Number one. And then number two, you've been warned, real estate and finance is like the mafia. Once you get in, you can never get out.
Absolutely. Oh, there we go. Gotta love live and forgetting to put do not disturb on my phone.
That's good. It's ringing. I love that your phone is ringing.
Yeah, I guess you can't complain. All right. So let's dive into a little bit about Jason, just so that my audience can get a chance to know you.
Great. I mean, do I just jump right in and tell you what my
jump right in?
Here's my 20-second bio. I've been in real estate and finance since 1992. Obviously, I started when I was 12 years old. I'm kidding. This is my 30th year, if you can believe that. And, I've talked to a lot of loan officers and I've talked to a lot of real estate agents in that 30 years. And so, as much as things change, whether it be sales or the market, the more they stay the same. And so it's been pretty great. I enjoy, all of the stuff that you're supposed to do in 2022 as a loan officer, whether it be just your regular conventional government, USDA, construction, all that stuff, as well as the technology. I am a nerd through and through. And so I love this industry. I can't imagine, doing anything else other than what I do. And I think I said this to you yesterday. The great thing about being a loan officer is that the majority of the time, the people that I'm talking to are other real estate agents or other loan officers, and they are a lot of fun, a lot of wisdom and a lot of fun.
Absolutely. I couldn't agree more, but I love that about you because you are such a relationship person. So that's got to stream over into your business as well.
For sure. I do like making relationships. And I always, it's funny you should say that. I say to my clients, when we do the initial interview for their application, if that's the way we go, I say, listen, this is going to be a lot of fun. I want to make it a good experience. And you and I are going to be friends for life, but especially for the next 30 to 60 days, however long it takes you to find a property, make an offer, get your offer accepted, and get that baby closed. We're going to be talking a lot, and I enjoy that. Not just the business part of it, but the relationship piece. And the same is true with my realtor friends like you, and the other EXP superstars.
Well, we love having you at all of our events, and you're such a great backbone to our business. So I appreciate all that you put out there for us, and always being just, a phone call away.
And my pleasure. It's been my pleasure, and it's been a lot of fun for sure. Looking forward to doing many years of this.
Absolutely. I'm still too young to retire, so I'm going to be doing it for a while.
Amen. Amen.
So let's talk about this fun market that we're going into, or that we've actually been in for a little bit. So just how is that looking for our buyers that are out there that are looking to purchase, say, their first home?
Well, it's all relative. And, there are a lot of buyers, unfortunately, that have been priced out of the market with the slight increase to rates because they were operating on like a razor thin, approval in the first place. And so when you have a slight adjustment to rates or an increase to interest rates, those buyers have now kind of gotten put on the sideline for a minute, but we still have a lot of buyers that are out there. And I feel like if you're a buyer and you can buy right now, I don't want to date this broadcast too much, but in October 2022, it is a fantastic time to be capable of buying, because I feel like the lender, your buyer's agent, the listing agent, and the seller, man, they are rolling out the red carpet for you in October 2022. And you get to feel like they're handing you an hors d'oeuvre and maybe your favorite beverage as you walk down the red carpet and you get to pose. I mean, you are really a superstar and a celebrity right now, and you are in demand. And so it's nice to feel appreciated, I think, as a buyer, because you are getting a lot. The rate may not be what you want, which is temporary, but you are getting almost everything you want in the transaction right now as a buyer.
Absolutely. I couldn't agree more. In fact, I've actually been excited to move into this part of the market because you can actually get back into feeling like you can be of service to your clients, where before it was kind of a rat race and it was just chaos, utter chaos there for a period of time. And now, I mean, I don't call it, we're getting to normal. Now I just think, it's the new normal, but we're finally starting to normalize where you have mutual agreements finally starting to happen. It's not demanding this and getting it. Now we can actually come down to actual negotiation in this market.
Yeah. Yeah, it's nice when I feel like, because so many sellers are in an equity position that, although they may be making a concession that they wouldn't have had to make in 2021, at least, we are in a market where, because we've had so much appreciation in a short period of time, that you still have the ability to do that as a seller, because and there may be a small percentage of sellers that are out there right now that, as they listen to us talk about, hey, if you're a buyer, you're going to get the world and you're going to get, this and you're going to get that, and they're going to roll out the red carpet. Well, the seller is on the other side of that. And so there is a small percentage, let's be, fully aware of what is going on in the market. There is a small percentage of sellers that may not have a ton of equity and have to sell right now because of life that happens. And I always do the somebody gets married, somebody gets divorced. Unfortunately, somebody may die. Somebody may have a kid. They may have a kid move out. They may get a job transfer, all of these things. And then we may have a market shift and you have to sell or you get to refinance. And so those that may not have a ton of equity to make a concession, that may be a transaction that is not as a good experience as a seller that's owned their home for a little bit longer. And you have the luxury of having equity to help a buyer make home ownership more affordable, and not have to actually. There may be a few sellers out there that have to write a check at closing to sell their home because they're in not a great equity position. But for the most part, I'm rambling here, but for the most part, I feel like our sellers that are out there are in a position that they can still walk away with a great profit on a home they've sold, and now they've got an income tax problem, which is a good thing to have.
For sure. Now, options for home buyers as far as loan products. I know that everywhere you see on social media, everyone's, offering the 2-to-1 buy down. If you would just elaborate on that for people that don't understand what a 2-to-1 buy down even means for them.
Right. It's a loan program. The FHA 2-1 buy down is a loan program. It's government, and it is designed to it has a rate that you start at, right? Now I'm going to use the word start twice in this explanation. But let's say the regular rate is, and I haven't even looked at rates today, and so I'm just going to use a number that's been a recent number. So let's say the rate is 6.75. The seller is allowed to pay a fee at closing, so it can come out of their equity. Hopefully, it's coming out of their proceeds and not out of their pocket. But they can pay a fee for the buyer. That essentially it's prepaid interest, but it's a one-time fee at closing, and it would allow the buyer to start at 4.75. So if the rate is 6.75, you get to start at 4.75 and your rate is fixed there for 12 months. And then it goes to 5.75. It's fixed there for 12 months. And then it goes to 6.75, where it remains for the other 28 years of the mortgage. Now that is pretty big because, and I'm just going to use an example here, of a $500,000 purchase. And in the interest of time, if you need to cut me off when I'm explaining stuff here, feel free. But let's say you have a $500,000 purchase and it's an FHA deal, and you're putting 3.5% down. If your rate is 6.75 on a 30-year fix, the principal and interest portion of that payment is $3,442 and some change, but $3,442. Visualize that. $3,442 at 6.75. With the 2-1 buy down, because you get to start at 4.75, the principal and interest portion of that payment. And I'm just talking about principal and interest because when the rate changes on a mortgage, it doesn't affect what your property taxes and homeowners insurance are. We call that the escrow portion of your payment, so that every year when your property taxes are due, they're paid automatically in November. And then every year when your homeowners insurance is due, that will be paid automatically. So that's the escrow portion. We don't really talk about that when we're talking about the difference in payment, because those never change, whether it's a 30-year fix, whether your rate's 20% or 2%. Your escrow is your escrow. So back to that principal and interest portion. If you start off at 6.75 at $3,442 with your rate, but you have a buy down to 4.75, that payment is $2,768, just over $670 per month difference in monthly payment. And I was talking to somebody the other day. I said, I don't know about you, but $670 is a lot of money to me monthly.
Yeah.
That's a huge difference. And then it kind of graduates from there. And although the borrower does have to qualify at that 6.75% rate, they still have to qualify at that rate. They don't get to qualify at the lower rate. That's okay. That can make it an easier pill to swallow as a buyer if you to max out your purchase power ability. Okay, I'm gonna go to the max because I know that I'm gonna start out at this lower payment, and then I can gradually get used to it, adjust my budget to it. Or like we've talked about before, you can, with most people over the course of time, if you look 2 years ago, what you were making then versus what you make now, you probably make a little bit more money now. And so you have to look forward in this case and say, okay, I know that over the course of time in the job that I have, I'm going to make more money. And so I can adjust to that. And then not to hog all the time here, but we presume that eventually this inflation problem and this recession problem are going to be to a point where in the next year or so, 2 years maybe, that interest rates will come down like they have always done in these regular inflation, recession cycles that we've watched over the last 50 years. We'll see that rates will come down. you will have bought earlier at these lower starting with a lower rate, and then be able to refinance when the rates come down, still have that great house, and still have a low great payment. So that's kind of the strategy or the idea behind the FHA 2-1 buy down. Is it gives you the ability to allow your budget to buy at the top of your purchase power, but start with a smaller payment. Makes it more affordable.
Nice. Now, what are some other options that buyers have available to them that you at Network Funding can offer them?
Well, we still close loans super fast, which is nice because, when you're in a market where the rates are changing on a daily basis, almost hourly basis, depending on what financial news comes out from the Fed or just from Wall Street in general. If you're out there making offers and you just want to get if you have a property that you have the luxury of it being vacant, which is a whole other conversation, a whole other video about the vacancy rate right now of homes that are listed for sale. But you can get that property under contract and get it closed fast, get it locked in, get it closed fast, so that if you're looking and making an offer on a day when the market is favorable and you can lock it in. That's one thing. I mean, we always look at adjustable rate mortgages, which are not as sexy as they used to be. You've been in real estate for a while. You're familiar with how mortgage rates, when they're adjustable, are typically a lot lower than what fixed rates are. But we're kind of in this weird market adjustment of getting back to what you love hearing people say this, the normal market. Adjustable rate mortgages are lower. They're not there's not as big a difference as there used to be, but for sure they are lower, which will help you, with home prices being where they are, will help you get into a home maybe that's in a little bit nicer area than where you would normally buy if you were just going straight fixed. If we're talking about, a buyer that may have, a debt to income ratio, they may be at their max. And they're like, oh man, what do I do? Well, maybe we could look at an ARM or an adjustable rate mortgage and see what that looks like.
Nice. Now, for those that are, really considering buying their first home, let's kind of dive into what it is that you would need from them in order for them to have the full application ready to go. Because I think that's where people get confused. They don't know exactly what they got to have.
Yeah. Well, I want to, one of my favorite things that a first-time home buyer will say when we're just starting down this path of the home buying journey is they'll say, oh, Tamra or whoever, right? Tamra told me to call you and see what it might look like, but I don't think I can buy right now because I just started a new job. That's one of my favorite things that people, they're worried about their employment situation. I love that they're worried about it. They're worried about their employment situation, and they're worried about their down payment situation and their closing costs situation. And so when it comes to the employment situation, all your lender cares about is that you have a 24-month history of employment. It can be different employers in that 24-month window. That's okay. If you just started a new job a week ago, 2 weeks ago, today, that's fine. We will use the income that you're earning today to qualify you, depending on the loan program, for your mortgage, because it's likely the 2 paycheck stubs. This is what you're really asking me. What's the documentation they need? But those 2 paycheck stubs will come during the approval process, during the buyer process. So, you can start looking sooner than you think. So what you're really asking me is, what's the list of what do we need? So we need 2 years of employment history. We need 2 of your most recent pay stubs, and we need 2 months of your bank statements, and we need 2 years of W-2s. Are you seeing a pattern here? And that gets us started. That can get us into underwriting. There's a bunch of other stuff that we have to do internally: pull credit, verify employment, a bunch of different things like that we do. But for you, 2 months of your most recent pay stubs, or two pay stubs, I should say, 2 months of your most recent bank statements, 2 years of W-2s, and that'll get you into underwriting. We can get the ball started, get the process started, and really give you a dialed in idea of where you are on purchase price, monthly payment, and out of pocket expense.
Wonderful. Because I know that even when I get the phone call of a first time home buyer and they're like, what do I got to do? What do I got to have? So that's like the number one question that you're asked, besides, I want to see this house, and you're like, well, let's back up 1 second. Let's take care of the pre-qualification process first.
Yeah.
Because I hate to jump the gun, because I think, especially in markets like now, they've got to know exactly what they qualify for in order to start looking, because prices are not what they were, a year ago, 2 years ago, not even close at this point. So 2, 2, 2, and 2, I think we can all add. So I think we got that.
Yeah. And the great thing about that initial interview, if you really wanted to time me, if the person said, hey, look, I have 11 minutes and then I got to go back to work, or I've got to go pick up, or I've got to go do this or that, right? I could ask the 6 questions that I ask in that 10-minute period and give you a dialed in idea of where you are on price. And then if it sounds like a process that is worth, following or proceeding, or walking down that path or getting started, then we can talk about that. But it's really quick. The conversation is really quick, and the information, those 6 questions that I ask, everybody knows the answer off the top of their head. It's not like they got to bring a note from their doctor and they got to have their mom in the background. I mean, they'll know the answer to the questions. It's easy. It really is.
Well, and that kind of comes back to your years of experience and knowing how to walk a buyer from start to finish, and making it as stress-free as possible, because we all know buyers get the buyer's remorse as soon as they realize how much money they're spending to buy a house. I can't tell you how many buyers I've walked off the fence going, no, really, this is normal. It's normal for you to go, holy crap, what am I doing? Because it's a huge step. But at the same time, such as people as yourself and me that work together, we can make it as stressful, as stress-free as possible.
Yeah. One of the things, when I'm allowed to make small talk, and I'm sure you're shocked that I'm capable of making small talk with somebody, but one of the things I really love to say is that this process, we want it to be a good experience for you, and we recognize that this is not something that you want to do on a daily basis like we do, you and I. And so, as a buyer, I want to take baby steps. I want to educate. I want to give you all of the information that you need so that you are confident that you are making an informed decision. And then I love to say, what I need to put on a t-shirt, we want you, me and my team, we want you to know before you owe. So it's important.
Yeah, I love that. So before you owe. I really like that, because I am all about educating my sellers, my buyers, anyone that I am working with. Education is key through the process, because we do this every day and they don't. This is once every 5, 10, whatever, many years it is in between buying and selling. But we do this every day, and we have to educate our clients. It's huge.
Yes. I feel like the stress level comes down a lot when you give somebody information so that they feel like they're not hurried, number one, but they can really have enough information to analyze and figure out that what they're doing is, a good financial decision that will help them, make a place for their, whether it be, single person all the way to, someone who may be an empty nester, whatever that is that fits. We want you to make sure that for what you're doing and the wealth that you want to build in your life, that it's been a good step for you to take.
Cool, cool. So next question for you is for your realtor partners out there, and for those that are not aware of the great Jason Allen, what would you say to a realtor out there that may or may not have a lending partner?
As far as what to look for?
Yeah,
Yeah.
absolutely.
Yeah. Oh my gosh. Well, one of the things, whenever I speak in front of a group of real estate agents, one of the things I love to point out is, I've never lost a realtor relationship because I over communicated. Now, but when I say that, I'm not saying that I necessarily that every real estate agent necessarily wants to get into the weeds of the processing of a loan and handling a buyer's client or a buyer's loan process, but for sure, just to let them know where it is and what's going on, and if there is a speed bump or an obstacle that has come up, we need to communicate what those options are as soon as possible, because I feel like if I deliver the good news fast and the bad news faster, then people are pretty happy with that, because yeah, they're going to be disappointed if it is bad news, but if we come at them with what the options are early so that they can pivot if necessary, then it still ends up being a really good experience for them, right? So you want to find a loan officer that communicates well and can explain and educate well. And obviously, the thing I said at the outset, you want to make sure you're talking to somebody that's doing what they're supposed to do in 2022, which is, have the loan programs, close on time. And when I know that when I say these really high level zoomed out, when I make these statements, there's a lot that when you zoom in, there's a lot that's going on. The duck with its legs under the water, right? It's really calm on top, but there's all this chaos going on underneath. In the loan process, because there are so many moving parts. But you want someone that can close on time, and you want a partner. Your partner recognizes that when they trust you with this polished, relationship that they've been nurturing for months or years, when they trust you with a client, with a referral, my gosh, you got to treat it like you're the real partnership, and recognize that that person has to have a good experience, and that everything that you and the real estate agent says from that day forward is going to determine whether or not you get a future referral. So it's really important to treat them well and give them a good experience. So there's that. And then of course there's all of the marketing. I think the marketing partnership that goes along with that. Find someone that understands, how to help you get more listings and more buyers. And this is probably the right before I made that statement. Everything before that was probably, mortgage and real estate 101.
Mm-hmm.
But the marketing piece, that's next level, because there are probably a lot of loan officers that may know how to get a deal done, but how to help you go out and get other deals and make it fun is really next level stuff. And so that's important too, in my opinion.
Absolutely. And that's why realtors should call Jason. And we'll make sure that they have all of your contact info, because I think you are a true testament to thriving in this industry. And I think you provide a lot of value for sellers, buyers, and agents alike. So
thank you.
We are glad to be in partnership with you as well. So last minute thoughts. I don't want to keep you too long, because I know you've got to spring here before too long. Any last minute thoughts? The market, buyers, the floor is yours.
The other thing I would say about, we talked about at the very beginning of this interview was that all of those buyers that wanted to buy and got priced out of the market, or whether it be because of the price of the home or the interest rate, hang in there. We know as professionals, loan officer and real estate agent, we know that, it wasn't like when rates started to creep up, that it was like the Avengers movie where when Thanos snapped his fingers and all those buyers just turned into dust and disappeared. They are still there. And so whether you're a real estate agent or a buyer, we know we need to remember that those buyers are still there. Those buyers need to know that there is light at the end of the tunnel because of these cycles that I've talked about over the last 50 years. And like I've said, I've been doing this for 30 and I've seen the history repeats itself. So we know you're there. We know that you're unhappily renting at the moment, but when we do get a handle on inflation and it starts to roll over and come down, and then now the Fed is faced with the task of getting the economy going again, the only tool that they have at their disposal that we can understand is raising or lowering interest rates. So when they start lowering rates, and they will, and whether it be 2024 or whenever that is, that's not that far. It's October 2022, Tamra Simons, okay. So when that happens, when rates start to go back down again, I guess I'm talking to the buyers right now that are capable of buying. You're going to get what you want right now with a temporarily higher interest rate, because when rates go down and all of those renters that really want to own homes are back in the market because now they can afford to buy a home, then it's going to flip. The script is going to flip. And now all those really nice, sweet sellers that were rolling out the red carpet for you today in October of 2022, they are going to be experiencing a better market for them, and they may stop offering all of these incentives to get you to buy. So if you're a buyer, hang in there. It's going to be fine. And if you're whether you're a future buyer or current buyer, home ownership is attainable and it is affordable. You just need to be talking to the right team.
And it's so worth it. It is so worth it. It's just, I think back to when I bought my first house and it was only 5 digits at that time. I'll never see that again, but but my interest rate on my very first home was 12%. And that was a great rate at the time.
Yes.
That was a really good rate.
But and your income was lower. Back in the day, right? Lower. Think about paying 12% interest in 2022 on a mortgage. Suddenly 7% doesn't sound that bad.
Absolutely. Absolutely. Well, thank you so much for your time. I certainly appreciate it. And we will make sure that all of your information is in a post wherever this is landed. And that way anyone can get in contact with you, whether you're a buyer, you have, you want information on this, you can get in touch with Jason, and realtors out there. If you need a lending partner, reach out to Jason. He will take care of you. So thank you again. I appreciate your time, and we'll do this again for sure.
I hope so. It was fun. Thank you.
Absolutely. Well, you have a great rest of your day, and we'll see you guys on the next episode.
See ya.